Hello there, I'm Mac from Capital Connect. Welcome to today's video, where we will be discussing transactional funding in real estate investing. If you're someone who is interested in getting into the world of real estate investing, then you've probably heard the term transactional funding being thrown around. In this video, we will dive deep into what transactional funding is, how it works, and how you can use it to your advantage as a real estate investor. What is transactional funding? Let's start with the basics. Transactional funding is a short-term loan that is used by real estate investors to finance the purchase and sale of a property in a very short period of time, typically within 24 to 72 hours. It's also known as flash funding or same-day funding. This type of funding is only available to real estate investors who are involved in what's known as wholesaling. Now that we know what transactional funding is, let's talk about how it works. Typically, a real estate wholesaler will find a distressed property that they believe they can purchase at a deeply discounted price. They will then put the property under contract with the seller, but they don't actually have the funds to purchase the property. This is where transactional funding comes in. The wholesaler will use transactional funding to purchase the property from the seller and then immediately resell it to a buyer at a higher price. The transactional lender is then paid back their loan plus a fee, and the wholesaler makes a profit on the difference between the purchase price and the resale price. So, why would a real estate investor choose to use transactional funding? There are a few key advantages to using this type of funding. Firstly, it allows investors to purchase and sell properties quickly, which is crucial in the world of wholesaling. Secondly, transactional funding doesn't require the investor to put any of their own money into the deal, which means they can do more deals with less capital. Lastly, because transactional funding is only used for a short period of time, the interest rates and fees are typically lower than traditional loans. As with any type of financing, there are risks involved with transactional funding. The biggest risk is that the wholesaler may not be able to find a buyer for the property they've purchased, which would leave them unable to repay the transactional lender. Additionally, because transactional funding is only available to wholesalers, it's not a viable option for investors who are looking to hold onto properties for the long term. In conclusion, transactional funding is a powerful tool for real estate investors who are involved in wholesaling. It allows them to purchase and sell properties quickly without putting any of their own capital at risk. However, it's important to remember that transactional funding is not without its risks, and investors should always weigh the pros and cons before using this type of financing. Thanks for watching. Don't forget to subscribe for more valuable investment advice. Contact us for more information. Just click the link in the description below to learn more about our loan options and see if one is right for you.